The next financial crash will either destroy your money or multiply it. Most people panic. A few people prepare. In this video, I'll show you how crises can become your unfair financial advantage. Hey, my name is Paul. And history keeps repeating itself. Fear spreads, markets drop, and headlines scream disaster. But while the crowd reacts emotionally, smart players move strategically. The big idea: fear creates opportunity. Every major crisis follows the same script. People stop spending, businesses slow down, markets dip, and panic multiplies the damage. The real danger isn't the crisis itself, it's fear-driven decisions. And fear, if you control it, can become your most powerful financial tool. I've lived through multiple downturns and rebuilt my business faster each time, because I prepared before the storm. Still, always consider your personal financial situation and consult a professional when needed. Build a financial shield. Before investing a single dollar, build an emergency fund. Your goal: cover 3 to 5 months of living expenses. Think of it as armor. It protects you from job loss, slow business months, and emotional decision-making. When you feel safe, you make smarter moves. Ride the market with index funds. Once your foundation is secure, consider long-term investing through index funds. They track many companies at once, spreading risk across the market. Markets may crash short-term, but historically they recover, often stronger than before. Consistency beats timing. Automate your investments and stay patient. Sell the shovels, not just dig for gold. There are 2 types of entrepreneurs: gold hunters, chasing big wins, and shovel sellers, providing tools that everyone else needs. During crises, demand shifts. Remote work, digital services, online education. These sectors explode when the world changes. Find what people need to survive or adapt, and build around that. Real estate during recessions. Real estate rewards patience. Recessions often bring lower prices and better interest rates, meaning smarter long-term deals. Negotiate calmly. Remove emotion. When others rush to sell, prepared buyers gain leverage. High-risk stock opportunities. Buying individual stocks is high risk, but high reward. Only invest money you can afford to lose. A simple rule: when the public panics, look for value. And when everyone starts bragging about buying, consider selling. Smart investing often means doing the opposite of the crowd. Mindset: crisis is a growth window. Economic shocks hurt, but they also reset the game. Those who act calmly while others freeze often come out ahead. Crisis isn't the end of progress. It's a shortcut for those ready to move. If you want more breakdowns on investing, business, and financial strategy, smash the like button so I know to make more. Drop your questions in the comments. And subscribe if your goal is to grow your income instead of fearing the next crisis.